So, Nikolas of Capital Inc., and I'm delighted to welcome you to the first panel of our three-day conference. The theme of this conference this year is shipping. Is it all glitter and gold? But there is a question mark at the end. So, as we know, and as Ted pointed out in his opening remarks, what a difference a year has made. We have seen that across sectors, different segments perform differently. So this panel, with industry captains from different shipping segments, are going to share with us their insight on the dynamics, the trends, the developments, the challenges in each segment. But also there's a common thread throughout the shipping industry. So we have a tremendous panel to open up. The theme of the conference is everything glitter and gold. What are the main opportunities, challenges, and risks in the industry? Ted, please take over. And again, thank you to everybody for joining us on this tremendous panel and great conference.
Yeah.
Thank you, Nikolas. And good morning, everyone, again. And good morning, panelists. Quickly to introduce, although I think they are well recognized by the audience, Robert Bugbee, the CEO of Scorpio Tankers, John Coustas, CEO of Danaos Corporation, Petros Pappas, CEO of Star Bulk Carriers, Nikos Tsakos, Chairman and CEO of Tsakos Energy Navigation, and Paul Wogan, CEO of GasLog. Guys, we've got a tight schedule. We've got a power-packed panel here. I know you all have a lot of great things to say. Let's try and keep our answers short and crisp as we can, but substantive, of course, so that we can manage the clock and give everybody a chance to contribute. We'll start with a question that I would like to ask to all of the panelists. And I think it goes along the line of, the question posed by the title of the panel is it all glitter and gold, with a question mark, as Nikolas said. And I'd like to ask you, for each of your businesses, what really are the key drivers of value over the next 3 years, as you see it today with the current market, environment? And I'll start with John Coustas, please.
Well, thank you, Ted. I think that it's definitely not glitter the moment that you see actual cash, getting in the company. What is interesting, this time, is that the actual valuation, despite, let's say, especially for Danaos, which has appreciated about 1,000%, but also for all the other companies, at least in the container sector, our valuation is not the valuation derived from, let's say, the values of the ships. Mm-hmm. The NAV, because already, all container companies are trading at a significant discount to NAV, which is even close to 50%. So our valuation is practically, let's say, discounted cash flow plus scrap. In this respect, we definitely believe that there are very solid drivers in the container sector for upside. And what is really important is that the counterparty risk, which at least for Danaos it has cost dearly in the past, is no longer there, because the liner companies, our customers, are making much more money than we do. So this is what makes I mean, this cycle in the container industry different from 2008, where we might have had, let's say, high valuations and high charter rates, okay, not as high as these ones. But at that time, our customers were not making nothing like the money they're making now. So all this makes the whole business model much more robust compared to that kind of period.
Mm-hmm.
So yes, it's, as far as container shipping is concerned, it's definitely gold, not glitter.
Okay, thank you, John. I'm going to shift the question then to Paul Wogan.
Thanks, Ted. I think the real drivers for us, we've seen a big increase in the LNG carrier rates over the last 12 months. And the big driver for us is really around availability of ships. And what I mean by that is, I think the charterers had got into a stage where they were thinking a little bit like you want to get a taxi in Manhattan, you come out to your hotel, every time you can call a cab, the one comes along and you go, and then you want to use it when it rains and you can't find one. And so you decide, actually, I really need a driver and a car. I need a limo that's going to take me where I'm going. And I think that's what's happening in the LNG shipping market right now. Last year, you could make huge money in the winter on arbitrage between the price of gas in the US and the price of gas in Europe and in Japan, but you physically could not get a ship. And so a lot of the traders left money on the table because they couldn't move the cargoes. And so what we've seen this year is a big uptick in traders wanting to take, and majors wanting to take ships on time charter. Mm-hmm. And we're seeing that sort of following through this year. And we're seeing, whereas before with existing ships at 10 years old, we would have been struggling to put ships on 1-year charters. They're now going on 3-year charters, 4-year charters. And so I think this really has legs for the LNG shipping industry, because there's an understanding that we are what makes the LNG shipping work. If you haven't got a ship, you can't take advantage of these massive arbitrage opportunities. And so that's giving us the opportunity to lock in at good rates for long periods again. We're coming back a little bit towards that industrial model. So I think it's looking very good for LNG over the next few years. And I would definitely agree with John. It's not glitter. It's going to be gold.
Okay. Mr. Bugbee, how about your thoughts on this question?
Well, right now in the tanker market, whether it's crude or it's products, it's neither glittering and it's neither gold. But I think that the great thing with shipping is that they follow their cycles, and I'm very sure that it's right now is actually going to become our time and our turn in the tanker market, and particularly the product market. And one of the great things is that the other markets being strong, yard capacity is filled up, and very difficult now to get a tanker new building order even within 2004. We've got the lowest new building order book on record at the moment. And on the demand side, it's very simply an opening up trade. As soon as countries open up, we start to drive more, we start to be more mobile. In particular, as we get into our stronger season, winter, we'll see South America's vaccination rates have gone up. They're opening up. Australia and New Zealand will reopen again. And all of us know people in business now, and people in, we just heard that Nick had just stepped off a plane from New York. I mean, we all know people right now today that are in the air flying, crossing the continents and going internally. And that will only increase, and that's going to add to the demand. So the demand will take off against a very fixed supply. And in addition, inventories around the world in products and crude are well below 5-year levels. And I think what's very exciting is that it's for the first time in many of these cycles, it's very hard to get an immediate supply response. Those new building yards are built up for quite a long time now.
Oh. Petros, how about your thoughts on this one?
Hi, Ted.
Good morning. Good
yes, several. Short term, I would say, Well, first of all, maybe it's not even gold. I think it could be platinum. Short term, it's COVID. Has a lot to do with congestions in ports and a number of inefficiencies that have actually helped the dry side a lot. China and how China will move is very important. They have 40% of world trade, but also the world economy. Supply of vessels, as Robert mentioned, is also important with 6.5% supply. This looks pretty good going forward. Longer term, in environmental regulations, these are going to have a major effect in our business. But I'm pretty sure we will. I'm not going to expand on all that. I'm sure we will have the opportunity to expand more during. And said to me earlier, one driver for what's happening right now is funds diverted from services to goods. I mean, people stayed at home, people didn't travel, so people started buying more stuff. And that, of course, helped tremendously the container business. And as a poor relative, dry bulk as well, following the container business.
Mm-hmm. Good. Okay, Nikos, let's get your views on this question as well, please.
Thank you. Well, as I came back from waking up New York, I have to say, New York feels like it's weekend every day. I mean, you are there and you see it, but many empty restaurants and many empty taxis. Mr. Hogan, you'll be very happy here in this case. But things are turning back. I was joking with Nick Bornozis last week, walking down the streets. You don't hear any sirens. Restaurants are empty, but I think it will change. Well, in our case, I think in shipping, we were victims of our, I would say, of the early success and the overstocking that happened in 2020. It's very usual when you have a crisis or a panic, people overstock with contango happening on energy. So I think everybody overstocked. I still remember the very difficult days of the early lockdown of March and April, just walking down the street and getting phones from most of the oil companies, asking us for one ship at any price, sort of thing. And this is something that all of us provided to our long-term charterers at very, very high rates. And of course, after that, the world stopped, as you very rightly said. Overstocking now is being used. Inventories are being used as we speak, and I believe that the market is away from its low. And I see Robert is already wearing glasses to try and count the very small returns that we get in tankers. I think but hopefully we have been at the bottom of this, and things are turning around. And I believe this winter will be a good proof of how quickly the market can turn around and become healthier. The long-term prospects, I agree with what Robert said, that we are almost in every segment in a good position with supply not coming, because a lot of our colleagues do not know exactly, like ourselves, what type of ships to order from the future. So I believe that the worst is over, and at least the tanker rates are going to be coming back.
Sounds great. Thank you. All right, guys, I'm going to shift gears. We talked about some specific questions for each of you, so I'd like to turn now and ask each of you one of those specific questions, if I could. And Paul, I'll start with you. You touched on it a little bit in your opening comment to the first question. What I'd like to understand, if you go a little bit deeper on, how do you really see this market developing? If you look out over the next, 1 to 3 years, and also kind of work in your thoughts on the pretty dramatic current market situation for the commodity and how that's impacting the business.
Yeah, I mean, I think it is all about the commodity. If you look back a year, we were just coming out of a summer where 120 cargoes had been shut in the US. And the question was, when does the LNG market balance? Is it going to be 25? Is it going to be 26? We have this oversupply at the moment. And we had one cold winter, which blew all that away. I mean, there was nobody this summer talking about shutting in cargoes, and you still have European inventories, which are 15% below where the 5-year average. So this time of year, normally they're about 91% full. Right now, they're about 76% full. And Europe is getting really worried. Do we have enough gas if there's another cold winter? And that's just driven the commodity pricing. I was looking at it, before I came on the panel. This time last year, we were looking at $2.45 Henry Hub. We're now $5.50, something like that. But we were looking at something like $4.50 TTF. We're now up near $30. We were looking at something like $5 in JKM, which is the Japanese market. We're now over $30. So the LNG market has tightened incredibly quickly. And what's driven it really, one, cold winter, but also what's happening in China right now. China have got a big step change in their demand for gas. And what it's done is it's driven the ton miles. So the incremental volumes have come out of the US and the incremental demand has come out of Asia. And that's the longest haul that you can have basically for LNG ships. And that's really what's tightened the market. And we don't see that changing. Now, again, with LNG ships, you can only order and get your ship in 2.5 years' time. So we see what the order book is. We can see what we think the demand is. If we continue to see the ton mile effect that we're having of cargoes going to Asia, this market looks as though it's going to remain tight for shipping until at least 2025, when the next batch of ships can be ordered. So it really is a kind of demand-driven, arbitrage-driven trade right now. But I really don't see anything that changes that in the short term. There are a lot of new buildings coming. I think we've got about 107 new ships on order for a fleet of 500 ships. Sounds a lot, but only 17 of those ships are not contracted at the moment. So you're being taken up by the volumes that are coming on. So, yeah. I think as long as we all stay disciplined in 2025, which is a big if, I know, they could have even more legs, but through then, I think this is looking like a very, very good market.
And just real quickly, because China's been, they've been a strong, buyer in the market for some time, and I think if not the largest, going to become the largest. But something is kickstarted further to demand. Is that just switching out of coal, or is it more than that?
I don't think I'm playing Monday morning quarterback, because I kind of was thinking this for a while. What happened in 2018? They really went to change out of coal in industrial and domestic use into gas, and not driven by CO2, but driven by pollution in the big cities. The 28 big cities went for that. There actually was a supply crunch and they couldn't get the gas the last mile. And so they've spent the last 3 or 4 years building the infrastructure, building the import terminals, rationalizing the pipeline there. We now have Pipe China, allowing third-party access into it. And now they've got the infrastructure in place. I think that's why we're seeing this next big step in demand increase. And this year, without a doubt, they will become the largest importer of LNG. They'll overtake Japan. So, and I don't see that, again, I don't see that changing in the near term.
Got it. Robert, I want to ask you a question on Scorpio Tankers' competitive, position in the market. You've got arguably the leading fleet in the product tanker space in terms of size, in terms of average age. I presume you believe that's giving you a competitive advantage going forward. Would you be looking in this market to strategically continue to grow the fleet, or are you happy with the position you have today, given the fundamental picture that you described earlier?
Oh, I think we're really happy with where we are right now. We're not just happy because the fleet is the newest fleet out there in terms of the major fleets, but also because we're through a lot of the capital expenses. The most, we've done 75% of our fleet has been dry docked in the last 18 months. So as we expect this turn to come very soon. I mean, traditionally the product tanker market turns in early November, and and then from that point we see a multiple number of years because of the constraints on supply, plus the change in dynamics for the refiners, which will increase ton miles, to take cash in. And what we're looking for is, this has been a long slog for us. We've been waiting, and the shareholders of Sting have been waiting a long time, and we need to get a return on the equity. And we've got enough leverage. Buying another 2 or 3 ships or whatever is going to do nothing. We already have very significant operating leverage to a market improvement.
Yep. Thank you. John Coustas, Danaos has had, up to the year to date, I would say a very active year, growing the fleet, chartering, entering into new time charters, and a lot of interesting developments, on the financial side, working with the balance sheet. What would you say are the key takeaways from this, and how is it positioning you going forward?
Well, as we all know, shipping is a kind of a cyclical industry. There are times that you expand, and there are times that you just collect the money. I think that we are probably at the collecting the money phase nowadays. One thing that we really want to concentrate is to be able to bring our debt considerably down, and really to be ready for the next expansion, which will come together with the clarification of all the environmental regulations. As you know, container ships, actually by themselves, they consume more than half of the marine fuel. And so definitely container ships are in the forefront of the whole fuel saving exercise. So at this moment, I don't think that we're really looking into further expansion of the fleet. First of all, because the prices are at levels which will make returns, expected returns, rather small. But I think we need to concentrate on how to comply with the new environmental regulations from an operational perspective, and that's really where we want to concentrate.
Okay. Nick, Tsakos, I wanted to ask you, TEN has a relatively smaller, certainly compared to the other sectors that you're active in, relatively smaller positions in both LNG shipping and shuttle tankers. Are these sectors that you would be looking to continue to grow in? How do you think about that?
Yes, thank you. Well, we have, as I said, a diversified energy fleet. We always want to follow the LNG markets. I believe LNG can be a significant part of the energy chain going forward. So, however, I was never very comfortable with the technology that changes quicker than my iPhone technology. So that's why we took it a step at a time. trying to accommodate every technology from the steam turbines to the tri-fuels to the XDF, hopefully the MEGIs, and at some stage, like Paul knows, perhaps the ball will stop rolling on the LNG and it will be somewhere, because the residual value risk for all of us is significant when technology changes so far. So we will be continuing those two markets. We're very happy and proud with the operational capacity and the joint ventures we have there with Hyundai. Shuttle tankers is something that we are also focusing and growing and looking at our first 6 vessels with dual fuel capacity, which we announced against the long contracts to major oil companies last week. So in that, we have the fleet of 72 vessels, the majority of them being on the crude and product side, but always following LNG and shuttle tankers as a significant part of our strategy.
Thank you. Petros, for you, Star Bulk over the last several years, I would say, has been quite active on the consolidation side. Ship for share type transactions and significantly grown the fleet in that manner. Do you see the potential for further consolidation in the sector, in the current, robust market environment? And is that something that is of interest to Star Bulk, or do you feel you have sufficient scale today to accomplish the objectives?
Thank you, Ted. I don't think we would say no to an accretive transaction. We think that size matters in various sectors like OPEX, G&A, commercially. People come to you first if you're a big company. A very important thing is that you can attract talent in a big company. You also attract institutional investors, which is very important. So we're positive about that, and people know that we're fair players. We've done deals with Germans and Italians and Americans and Norwegians and Greeks, and we have demonstrated that we're flexible. We play a fair game and we have common sense. So I think both we are interested, and I think that other people might be interested to join us going forward. So yes, the answer is yes. If there is attractive deals, we will do them.
Great, thank you. All right, then I'm going to shift back to a question that I'll ask of each of the panelists, and that is regarding differentiation, and how do each of you seek to differentiate the companies you run in the market? And I guess I'm thinking primarily from the point of view of the customer and the investor. And let me start with I'll start with Nikos on that one.
Thank you. Well, I think every model has its pros and cons. We have chosen. We have been in the being Greek. We believe that shipping is a marathon race and not a sprint. So we try to do things with longer term, both with our investor base and also with our charterers base. So whereas we keep a significant part of our business in spot or at least in profit sharing arrangements, we tend to go for the longer term businesses that provide us the capacity to renew our fleet in today's very, I would say, technologically interesting periods of time, hand to hand with the end user. So I would say that's what differentiates us, and that's why TEN has been able to have a steady return in a very cyclical time. I still have it's fresh in my mind from my presentations in New York. We've been public 28 years, and we have an average dividend yield of 5.25%, having paid in excess of $500 million in dividends. We have been able to do this by long-term, mainly by long-term contracts, and sometimes leaving some of the upside on the table on the spot market. So I think that's the model we've been working, and I think it has served us well through thick and thin as a company.
And I believe that dividend has been paid in every year since you've been a public company, which is impressive, which is definitely impressive. Okay, thank you. Let me then ask Robert, what differentiates Scorpio tankers in the market?
Robert, you're muted. Robert,
Yeah.
you're muted.
Sorry. Thank you. From the customer side, what differentiates us is our fleet. I mean, as pointed out before, it's very modern, and it's also very homogeneous. I mean, we have many of the ships that are our sisters in each of the various classes, and we have a significant amount of ships that we can provide to the customers in all of the 4 key categories of the product tanker market. So we have that scale of information and the scale of service so that we can enter into contracts with affreightment if we want to, etc. From the shareholder side, I think one of the things that we've always had is volume and liquidity. So a fund in these times, what's very important to them is to be able to get in and get out. And that's something that has really been almost all the time available to shareholders in Scorpio tankers. And also we at this point are very pure. We believe that the market is going to improve. As Pappas pointed out, people are going to change from spending money on goods to spending money on travel, services, going out, etc., etc. So as that market improves, because virtually all of the vessels are on the spot market, that's going to be an immediate improvement into the bottom line.
Thank you. John Coustas, could you address this question for us, please?
Yes, thank you, Ted. As you know, in container shipping is, compared to the other 2 sectors, is the one that is more, let's say, customer-centric, because we do not operate any spot vessels. All our ships are chartered, multi-year commitments. And that's not just now, it's always been the case. We are building ships with long-term charters for our customers. Really, I think that the most important quality that we want really to develop in our company is the ability to understand and execute all the requirements of our customers. And this is extremely important nowadays, because when we have to comply with all the future environmental regulations, it's not just about building new ships or about, let's say, using fuels which do not exist. I think the #1 response has to be the efficiency and reduction of the assets that we already have. And to achieve that, you need a different level of cooperation with your charterers. And we believe that with our technological expertise and our advantage in digitalization, which, for us, we have been at the forefront of this process for many, many years, this will give us a significant advantage. Now, as far as, let's say, the investors of the company are concerned, I think that liquidity, as Robert said, is very important. I think that from all our peers, we have the highest liquidity in terms of percentage of shares traded every day. So it is, I think this is one of the most important aspects for investors. The other thing is, of course, the dividend. With our model, the dividend can be steady and can be also, let's say, ensured in the longer term. yes, I must admit that we have been a bit stingy on the dividend compared, let's say, to the money we've been making. But yes, this is something that, of course, is going to be addressed through time. And of course, our number one concern is not just the short-term distribution, but really the ability to see that dividend as an ever-growing number together with the company's overall profitability.
Okay, thank you. Paul, could you address this for us, please?
Yeah, for me, I mean, I think the number one thing for us in terms of trying to differentiate ourselves with a customer is our operational excellence. You know, LNG is a really demanding cargo, as Nikolas will also attest to, and you have very demanding customers. And I think the ability to move that ratably and safely all the time is still really very highly valued in the LNG market, and something that we spend a lot of time and a lot of focus on. And then you try and ally that with trying to be flexible and innovative with your customer and providing the service that they want. And so, you know, very, very simply, always for me, it comes down to how well can you operate these ships, how safely can you operate these ships, and how can you then make your customers look good in their customers' eyes. When you go to the terminal, how do you make sure that it's a flawless operation every time, and that the terminal are inviting you, or you're wanting to invite you back? And I think if you can do that still in the LNG industry, you can differentiate yourself in terms of the returns that you can get. And for the investors, of course, having taken the parent company private earlier this year with BlackRock, it's really around GasLog partners. And there, I think, you know, what's interesting is they're becoming one of the few companies that are still listed with a parent company going, with now with Herg's MLP being taken out, with TK now going private. If you really want to play the LNG market, you know, not just LNG shipping, but the LNG market, there are very few options out there. And I think having that, you know, having that combination of private and public, I think the public company can benefit from that. So I think with their exposure to now what we're seeing as a strong spot market, I think it's been a really interesting time for the partnership.
Thank you. Petros, let's have your thoughts on what differentiates. How do you differentiate yourself in the market?
Thank you, Ted. I think a number of things, actually. As I mentioned earlier, size, which is important for economies of scale. Our attention to costs. We are among, if not the lowest OPEX operators in the dry bulk sector. Then the quality of our management, which is proven by our top right ship ranking, and it's a good combination, good quality and low costs. Then the fact that our management company is part of Starbulk, we align our interests with our shareholders. I think we have very good governance. We're transparent. We have solid risk management practices. A board composition that takes pleasure in challenging management. Generally, we're shareholder friendly. We try to do things that assist our shareholders. Actually, and our dividends are going to be pretty good going forward. And then I think that we have a management team that thinks outside the box in many occasions, and we have a very solid in-house market analysis departments that helps us a lot in our decision making commercially. All these things, I think, to a degree, actually assist our company to do very well compared to our peer community.
Great, thank you. I think it looks to me like we have maybe 7 or 8 minutes, possibly 10. So we're gonna need to maybe just tighten up the answers a bit on the next question. I think what I'll do is go with one of the questions that I had again presented to the group. You know, several comments have been made during the discussion we're having now on you know, the next generation of ships, the technology, the fuel, and so I wanted to ask you each, you know, kind of how you see that issue developing from your company's perspective, and maybe within the sector that you're operating. You know, the IMO's targets, objectives, requirements have been out there now for a while. There have been some enhancements to those. How do you see the process developing in terms of creating a framework where ship owners structurally have a framework that it will begin to make sense to make investment decisions within? And I'll start with Robert on that one.
Okay, well, I can imagine most people are going to start with the engines, combustion, etc. But I think in the tanker business, you've got to first question whether or not you should order a new building or not. Full stop. Whether, you know, regardless of what form of combustion or other, you know, modern features you're going to have on it. And what I mean by that is already you've got space taken up into 2004. Very soon we'll be into 2006. And if you just go 5 years, first 5 years from 2006, you're into 2031. And you're into that area where, you know, states like New York have said they don't want to have any carbon cars by that time, or trucks. That you could well have reached, you know, peak oil at that shortly there. And certainly if you have a vessel delivering in 2025, 26, you're going to have to question whether its viability over a 20-year period. Now, I think that happens to be, you know, an advantage too, because we do have, and you know, we have a wind installation company, and we know that, you know, we are actually going to have to, believe it or not, use gasoline and heating oil and conventional carbons for quite some time, certainly till, you know, the next 6, 7, 8 years. So I think that here, that very question of what's going to happen to the headline demand side should also put a restraint on the supply response through new buildings, which could lead to quite a boom during that period between now and the next 5, 6, 7 years, because of the reluctance of capital just to throw money even when the market itself improves shortly. I think that will be the key question.
Okay. John Coustas, you mentioned specifically environmental regulations becoming increasingly critical within your sector, and I'm sure for the sector as a whole. How would you answer this?
Well, at present, there is really no clear path towards, let's say, the decarbonized vessel. Okay, we all know that we're going to have technologically vessels able to run methanol or ammonia, but we don't really know when we will be able to have green methanol or green ammonia. And it's really, to me, it will be really a disaster if shipping is forced to use, let's say, fuels that supposedly do not produce CO2. However, in order to produce them, you have really used more CO2 than you would have had if you had a direct use on the engine of the vessel.
Right.
So this is extremely critical for everyone to understand. I think that ship technology to absorb let's say, these fuels can be moved relatively quickly and definitely much quicker than the availability of these fuels. So, to me, we should be in all industry, I mean, for the sake of the world, not just for our industry, try to make sure that we do not do more harm than good by pressing ships to use, for example, let's say ammonia that is used from processes from natural gas that in the end will emit much more CO2 in the atmosphere.
Got it.
And we should concentrate, as I said, on other fuel saving measures. And this is for our industry very important because we will be forced into slowing down. As the only measure really to reduce CO2 in the medium term.
Thank you. We're running short. I'd like to ask Paul Wogan, your thoughts on this?
Yeah, I mean, I maybe I'll just look at the short term. I would love it if we could get a bit more clarity around the rules and how they're going to be implemented. We hear a lot of talk at IMO, but nothing firm, and how, and what are the consequences of not meeting these regulations. As someone working in shipping, if we could get that, then we can start to think about what the solutions are. I think in the short term, though, it's really interesting because I think with the LNG fleet, the answer is going to be slow steaming. And, at a time when we're seeing the market tightening, slow steaming is going to continue to tighten the market. So, interesting times. I would love to see some more clarity around what the actual, regulations are going to be and how they're going to be enforced and what the consequences of not meeting them are going to be.
Okay, I think panelists, we've reached our time. Sorry, I didn't get to touch the other two panelists with this question. It sounds to me, if I've not misheard, that there is still some way to go here before the industry does have a more clear framework, both in terms of technology and regulation, that I think is certainly needed to again make new investment decisions in a way that will be sustainable as we get out further in time. So I'd like to thank you all again, guys. It's been a great discussion. I think you've been really helpful in kicking this conference off in a good fashion, and I appreciate your participation. So I will thank you and turn it over to Nikolas.
Well, I would simply say a great thank you to all of you. As Ted pointed out, this has been a tremendous way to start the conference, and obviously you are captains of the industry, and thank you for your unique insight. Thank you very much. I can say that looking at the attendance, obviously this has been a tremendous panel and a great forum. Thank you very, very much to all of you.
Thanks, guys.
Thank you.
Nice job. Thank you.
Thank you.